Libya, despite its vast oil reserves, remains mired in economic stagnation in 2025. The GDP has flatlined and millions of Libyans face lost opportunities and a future clouded by uncertainty. High youth unemployment and soaring inflation have become chronic, eroding livelihoods and fueling unrest. The nation's oil wealth, instead of driving prosperity, has deepened political divisions and left other sectors neglected. Libya's dependency on oil has made its economy fragile, vulnerable to shocks, and unable to implement needed reforms. Without political stability and unified leadership, Libya's economic future remains bleak. Libya's economy finds itself in a precarious position, dangerously dependent on a single commodity, oil. This overwhelming reliance creates a significant vulnerability, making the nation susceptible to the volatile fluctuations of the global oil market. The entire economic structure rests upon this foundation. Oil revenues are the lifeblood of the Libyan economy, accounting for over 95% of export earnings. This near-total dependence means that any downturn in oil prices or production has an immediate and devastating impact on the nation's financial stability. This extreme reliance creates a boom-and-bust cycle, mirroring the unpredictable nature of the global oil market. When prices are high, the country prospers. When they plummet, the economy suffers severely. Such volatility makes long-term planning virtually impossible for businesses and the government alike, fostering an environment of uncertainty and hindering sustainable development. Investment dries up, and economic diversification becomes an elusive goal. The government, flush with oil revenues during boom periods, uses these funds primarily for subsidies and public sector jobs, creating a large and often inefficient bureaucracy. This reliance on the public sector discourages private enterprise and stifles innovation, further hindering the development of a diversified economy. The private sector struggles to compete with the heavily subsidized public sector. Furthermore, control over oil infrastructure has fueled conflict and instability within the country, as various factions vie for power and access to this vital resource. These power struggles often result in the repeated shutting down of oil production, exacerbating the economic woes and further destabilizing the nation. The constant disruptions hinder any chance of sustained growth. The overwhelming focus on oil has led to the neglect of other crucial sectors, most notably agriculture. Manufacturing and services have also suffered, remaining underdeveloped and unable to provide alternative sources of income and employment. This neglect has hollowed out the economy, leaving it vulnerable and lacking resilience in the face of external shocks. Consequently, when oil falters, whether due to price drops, production disruptions, or political instability, there's simply no backup plan. Every disruption, no matter how small, quickly escalates into a national crisis, threatening the stability of the entire country. In conclusion, Libya's profound lack of economic diversity leaves it dangerously exposed to the whims of the global oil market, creating a cycle of instability that hinders long-term progress and prosperity. Libya's greatest obstacle is persistent political instability, with rival governments and militias dividing the nation. This fragmentation paralyzes decision-making, disrupts economic institutions, and undermines the financial system. Investors are deterred by insecurity, weak property rights, and unpredictable governance. Corruption flourishes, public services decay, and infrastructure crumbles, stifling any hope of growth. Armed groups create fear and disrupt supply chains, making daily economic life precarious. Citizens hesitate to invest or start businesses, trapped in survival mode. Libya's divided political house is causing its economic foundations to collapse. Beyond the oil fields and the energy sector lie other facets of Libya's economy. Libya's non-oil sectors, agriculture, tourism, manufacturing, once promising avenues for growth and stability, are now mere shadows of their potential. They represent missed opportunities and untapped resources, a stark reminder of what could be. Agriculture, once robust, a source of sustenance and livelihood for many Libyans, now suffers from years of neglect, underinvestment, and outdated methods. The fertile lands are underutilized and the skills of its farmers are slowly fading. This decline is forcing a heavy reliance on imports, impacting the nation's food security and economic independence. Tourism, with Libya's stunning Mediterranean coastline, ancient ruins, and rich cultural heritage, could thrive and become a significant revenue source, but persistent insecurity, damaged infrastructure, and poor road conditions continue to keep it dormant, hindering its potential to flourish. The financial sector, crucial for investment and economic activity, is stunted, weighed down by political divisions, corruption, and outdated regulations that stifle innovation and growth. Manufacturing, once a budding sector, is now nearly absent, severely hampered by high operational costs, frequent and unreliable power outages, and suffocating bureaucratic barriers. Consequently, most goods are imported, steadily draining the nation's foreign currency reserves and leaving virtually no industrial base to support sustainable economic development. This profound lack of diversification makes the Libyan economy exceptionally fragile, vulnerable to fluctuations in global oil prices. As a result, unemployment remains stubbornly high, particularly among the youth, creating social and economic challenges. Reviving these neglected sectors through strategic investment, policy reforms, and good governance is absolutely essential for securing Libya's future prosperity and stability. Libya faces a vicious cycle of high inflation, crippling interest rates, and mounting public debt. Inflation erodes purchasing power, hitting the poorest hardest and fueling discontent. High interest rates, meant to curb inflation, stifle business investment and job creation. The government's reliance on debt to cover deficits diverts funds from essential services. Rising debt burdens future generations and limits policy options. Policymakers are trapped, unable to stimulate growth without worsening inflation or debt. Breaking this cycle demands deep political and structural reforms. In late 2024, Libya briefly increased oil production, bringing a surge of revenue and hope. This stabilization offered a respite, but the underlying political and economic problems remain unresolved. The peace is fragile. Renewed conflict could halt oil flows at any moment. Inflation, high interest rates, and unemployment persist, while non-oil sectors and infrastructure languish. Increased oil revenue risks delaying urgent reforms, tempting leaders to rely on patronage. Libya has a narrow window to address its deep-rooted challenges before the next crisis. Pumping more oil is a temporary fix, not a path to lasting prosperity. Libya's recovery hinges precariously on a number of critical factors. The path forward is complex and fraught with challenges, requiring careful navigation and a steadfast commitment to progress. The nation stands at a crossroads, and the decisions made now will determine its future trajectory. Primarily, it hinges on a lasting political settlement. This means bridging divides, fostering inclusivity, and establishing a framework for peaceful coexistence among all factions. Without a stable political foundation, sustainable progress will remain elusive. This settlement must lead to unified, transparent governance. Corruption and mismanagement have plagued Libya for too long, hindering development and eroding public trust. Transparency and accountability are paramount to building a strong and prosperous nation. Only then can the country truly begin to heal and rebuild. Only then can the nation move forward with confidence and purpose, leaving behind the shadows of the past. Only then can the country pursue meaningful economic diversification. Relying solely on oil revenues is a risky strategy, leaving Libya vulnerable to global market fluctuations. Diversification requires strategic investment in neglected sectors, such as manufacturing, tourism, and renewable energy. These sectors hold immense potential for job creation and sustainable growth. Modernizing agriculture, making it more efficient and sustainable, is crucial for food security and rural development. Rebuilding infrastructure, from roads and bridges to power grids and water systems, is essential for facilitating trade, attracting investment, and improving the quality of life for all Libyans. And cutting red tape, streamlining bureaucratic processes, and fostering a more business-friendly environment are vital for attracting both domestic and foreign investment. These are vital steps towards creating a more prosperous and equitable society. Addressing the pressing issue of youth unemployment is paramount to ensuring a stable and thriving future. This requires comprehensive education reform, aligning curricula with the needs of the modern workforce, and equipping young people with the skills and knowledge they need to succeed. Furthermore, it requires strategic labor market incentives, encouraging entrepreneurship and creating opportunities for young Libyans to find meaningful employment. Ultimately, Libya must shift its economic paradigm. It must transition from simply distributing oil rents, a system that has fostered dependency and inequality, to fostering genuine productivity and private enterprise, creating a dynamic and competitive economy that benefits all Libyans. The easy path is continued oil dependency, maintaining the status quo and avoiding difficult choices, but the hard path, the path of real reform, is the only way to build a truly sustainable and prosperous future for Libya. The challenges are immense, no doubt, requiring courage, resilience, and unwavering determination. But urgent change is essential, now more than ever, to address the deep-seated problems that have plagued Libya for far too long. This change is essential for future generations, for the children of Libya who deserve a brighter and more promising future. Libya's paradox of plenty, the fact that a nation rich in resources struggles with poverty and inequality, can be overcome, but only through decisive action and a commitment to inclusive and sustainable development. It can be overcome with courage, vision, and unwavering commitment from leaders and citizens alike, working together to build a better Libya for all. For more data-driven insights and global market breakdowns, subscribe and turn on notifications. Stay informed, stay ahead. This is Economics FX, where clarity meets strategy. Until next time, trade smart.